Hello everyone, and welcome to Health Law Talk presented by Shahardy Sherman Williams. Before we get started, please be sure to subscribe to our podcast and follow us on Facebook, Twitter, LinkedIn, and YouTube, linked in the description below. We hope you enjoy this episode.
And good afternoon, everyone. Welcome to another edition of Health Law Talk with Shahardy Sherman Williams. You have Conrad Meyer here in the studio, Rory Bellina.
Good afternoon, everyone.
And today we have a very special guest with us today, one of our partners here at the firm, Adam Stumpf. He is one of our partners involved with a lot of the COVID and business interactions with companies in the area, and he is going to talk to us about the economic injury disaster loan and specifically how it's related to COVID. And so, Adam, welcome to the show.
Thank you so much for having me. Rory and Conrad, y'all are doing a great job with the show. I'm so happy to be on it.
That's great. We're happy to have you here. So I learned something interesting this morning when we were talking about this, the EIDL. I had no idea. You said it was for COVID, and then I thought it was for just about anything. But talk to us. What is EIDL? What does it mean? What's going on in COVID land for this?
Sure. And to give you kind of a history, right when COVID came on the scene, obviously worldwide pandemic, businesses shutting down, they needed resources, and Congress stepped in on the federal level and said, well, we're going to run a bunch of different programs, one being the Paycheck Protection Program, which is now closed. That was very popular. Then at the state level, you had like Main Street Recovery, you had the restaurant, and at the federal level, you had the Restaurant Revitalization Fund. And the most popular one that's still sticking around is the EIDL, the Economic Injury Disaster Loan. And that is a loan through the SBA for exactly what it is, an economic injury because of a disaster, right? And it's for businesses to take out a loan that must be repaid over a long term and a low interest rate through the SBA, the Small Business Administration.
And when you mentioned disaster, you mentioned obviously the pandemic, but here in Louisiana, we just experienced Hurricane Ida. It's available for that as well?
It is. These EIDLs have been around for a long time, and it's really just coming into the spotlight because of COVID and because everybody is experiencing this national disaster, right? So they've been around. SBA has been lending money basically since their inception. That's kind of one of their missions. And now you have an EIDL available nationwide. And then if you're in Louisiana, there's EIDL money available as a result of Hurricane Ida. Now, to be clear, if you have an EIDL already existing for COVID,
right,
and then you go try to take one out for your business as a result of Hurricane Ida, there may be an issue there in the sense that the SBA will likely offset any amounts. Sure. You can't have two existing EIDLs for the same thing. That's the advice that I've been getting from SBA. They've published differing advices, but in practice, I'm seeing that those second EIDL Hurricane Ida loans, for a business, if you have a COVID EIDL loan, they're canceling each other out.
A couple of questions that I was just thinking of when you started talking about this, but I think it'd be beneficial to our listeners if you could kind of explain to us, what's the starting process for this? Who qualifies? Who doesn't? Kind of some of the basic, and then we definitely want to get into some of the details of it. But kind of, go back in time for someone that reaches out to you and wants to know, what is this? Do I even qualify?
Exactly. So that's a very important question because not everybody necessarily qualifies, but a lot of people do. If you were in business before January 30th, 2020, you are basically eligible.
So pre-COVID.
Right.
Okay.
Right. So you had to be in business pre-COVID. You had to have under 500 employees.
Okay.
And that's basically it in the general scheme of things.
Sure.
Obviously, you can't be a foreign country or a foreign entity or anything like that. But basically, you're going to likely qualify.
So let me ask you this: when you think of EIDL for COVID, is it for businesses who have lost income or have had from a mandate or a shutdown? Is that what it is, or is it just in general businesses who have been affected in some monetary fashion from COVID?
It's more general.
It's more general.
Right.
Okay. So that even that's more helpful for businesses than if it's even more broad.
Yeah, and exactly. I mean, considering we're dealing with a worldwide pandemic, it's almost inherent that you're going to have some type of a loss or expense associated with it. So I've been seeing loans being approved on a wide range of basis.
Okay. And when you say loans being approved and different expenses, we're talking about lost revenue, lost income, loss of sales. It's very broad on what this loan can be applied to.
Right. So, that's a very important question because we want to make sure we're using these loan funds correctly, right?
That's my question is that, okay, if let's say you qualify for this, you submit the proper, paperwork and everything, what can you use the money for?
Right. So
or what you can't.
Right. So the money gets automatically deposited into your account. You say, okay, you cannot go out and you cannot, use the money frivolously.
Sure.
Okay.
So you can't add like an addition onto your building and say, hey, by the way, I want to do some capital spending. Let me go ahead and use the money for that, right?
Unless you're in the business of adding on additions to buildings.
Well, that's different,
okay.
right?
Sure.
Right.
So we want to look at, very recently, as of like a month ago, you could only use it basically for working capital.
Okay.
Okay. We can't go make capital expenditures and things like that. They're outside of the ordinary working capital of our company. The SBA just relaxed those rules, though, which it made a huge difference in businesses' lives. So now what you can do is you can pay, using EIDL funds, business debt.
Okay. And that includes salaries, wages as well?
Oh, I mean, that's totally separate. So let's say you have a business.
You mean long-term debt?
Long-term debt.
Wow.
You can go pay off that, prepay it with EIDL funds. So now you basically can refinance some of your business debt. Now, it can't be
down to that lower interest rate.
Down to a lower interest rate.
Wow.
So it can't be other SBA loans or any other federal government loans, but it can be just, a loan from Chase, right?
Okay.
You get in there, get your EIDL fund, you pay that off. Now, you've just replaced potentially, 7% interest with 3.75%, which is the interest rate for these loans.
So this is currently still open. You can still do this.
Absolutely. The program shuts down December 31st.
Okay.
Oh, so there is a trigger. Okay.
There is a trigger. We want to make sure, like my clients are getting their applications in now.
Sure.
So the SBA has time to process them.
So walk through, you apply online for this, correct?
Yes.
And then what happens? Can you give us a little time frame or timeline of what will happen after you apply? I assume you have to submit documentation and that kind of stuff to some sort of portal.
Yes. So you go apply online. It's a 3 kind of online page process. After that, what's going to happen is you'll get an email confirming your application. Then you have a portal, and you have a login for a portal where you continually check. And I wish I had the magic crystal ball for all my clients.
Sure.
To say, this is how long it takes. But quite honestly, it's been kind of a roller coaster ride, and it just really depends. It could be as short as 2 weeks. It could be as long as a month.
Okay.
So what does SBA do to tell you how much you've received? I mean, is there some sort of, calculation or formula they use to say one business might get $50,000 where another one might get $500,000, or what's the quantum? How do they do that?
Yeah, so it's kind of been all over the place. In the beginning, it was 2019 revenues minus cost of goods sold times 2.
Okay.
I've seen numbers as of just this past week and the week before that do not add up to that. So it's a little bit of a mystery, but it's one of those things where I'm encouraging people to go apply, get that figure.
Sure.
If you're not happy with the figure, then we can go from there.
And then once you get that figure, what happens there? Do you go to a bank for closing, or does it come directly from? How does that work?
Right. So it's coming direct. A bank is not involved.
Okay.
The SBA is the bank.
Okay.
In this scenario, and the money literally gets deposited into whatever account that you tell them where to deposit it.
Okay. And you have to, I assume, DocuSign a ton of documents saying that you'll provide collateral and you won't default on it and that kind of thing.
Well, I don't know about collateral. That's one thing I was going to ask. I mean, is there personal guarantees? Or do we have collateral? What's the story behind that?
Right. So it varies depending upon the level of your loan. So, $0 to $200,000, you're not going to have a personal guarantee.
Wow.
Okay. Which is a huge deal for these business owners because people are very afraid of personal guarantees, and I don't necessarily blame them. So that is certainly a highlight of the loan.
Okay.
Interesting. So, and what about in terms of collateral? If there's no personal guarantees, is there anything like collateral on the property? Say you own the property. Have you seen anything like that?
Yeah, absolutely. And they have it structured to where if you're under $25,000, if that's your loan amount, you're under that, you're going to not have any collateral attached to it. And just for the listener's sake, collateral is something that basically you give in security for you repaying the loan. So let's take, for instance, a loan from $25,001 to $500,000. The SBA is requiring collateral on your business assets. So let's say you have a whole storage room full of inventory. The SEC is going to take, the SBA is going to take a UCC on that, which is a security device that says if you don't pay back this loan, we get to go in and take your inventory. Okay. So that's 0 to 500,000. For 500,000 to 2 million, they're going to look to any other assets besides your movable property.
Okay.
They're going to look to your business, actual land and buildings and things like that.
Interesting.
And I know we talked about it a little bit, but I'd like to go back because I think this is probably the biggest question you get is, let's talk a little bit more about what can you use this for and what can't you use it for? I mean, talking about business expenses, are there certain things that the government precludes you from using it from, or is it just anything that you deem relevant and necessary that you could back up to keep your business in operation?
Right. So I tell everybody, if it fits under the definition of working capital, you're 100% safe.
Okay.
Right. We don't want to go outside of that definition. And then, as I said previously, now we can go pay off business debt, which is a big deal. Just make sure that debt is not SBA or government debt, because we're not going to replace an SBA loan with another SBA loan. They will not allow that. So, the general advice is, without going through every specific instance, is working capital and business debt that existed, when you got the loan.
Okay.
Interesting. So let me ask you this. I know a lot of people over the last year and a half did the first round of PPP, sometimes some of them did the second round of PPP. So what do you tell folks and businesses, who have already done a first, maybe a second round of PPP when it comes to EIDL?
Because I'm and I'd like to echo Conrad's question because you're much more knowledgeable on this than I think Conrad and I both are together.
I would agree with that.
But I heard, and everyone hears different things. Aren't there some sort of like set-offs where you can't have both, or they subtract one from the other with PPP and EIDL?
Right. And in the very beginning of all of this, all of this being COVID, businesses were getting EIDL funds and PPP funds potentially at the same time, and they did not know what to do. And what you couldn't do was use those funds for the same purpose. So, going back to the PPP, that's the Paycheck Protection Program, which is now closed. You could only use that for payroll and a very limited scope of expenses, and that was forgiven. Okay, so then you couldn't use EIDL funds for the same purpose, and that was explicitly stated in the CARES Act, which Congress passed, which set all this stuff into motion.
Sure.
So nowadays though, PPP is kind of not in the picture anymore. Right.
Sure.
On the accounting side, certainly speak with your CPA about how you're going to, list out all those expenses on your financials. But now we're looking at EIDL still sticking around. PPPs are usually no longer there, kind of factor. So you kind of have wide breadth in what you can use your EIDL funds for.
Okay. And what are some things that people are denied for where they don't get this EIDL, or if they they're having trouble with the application? What are some common things that you're hearing from clients when they reach out to you and say, I don't know what's going on, I'm not getting this?
Right. So this is what I'm hearing. We got denied. They said we weren't in existence.
Okay.
At the time that we needed to be in existence. Like, the business wasn't formed at that time. And it's usually some type of error on the part of the SBA not being diligent, in the sense that they're not looking at the information that was provided, right?
Okay, sure.
Or it's the flip side to that, and it's the client or the borrower in this case not providing the correct documentation.
Okay.
We need to provide the SBA with articles of organization, tax returns, things like that, And sometimes businesses, especially small businesses that never really thought about this, don't have their affairs really in order.
Sure.
So when I get it, I go through a whole laundry list of things. And normally they need it anyway, regardless of the loan. So we're going through the operating agreement with them. We're going through the articles, making sure everybody's accounted for, all the members. So it's basically those types of things. Like, the other reasons are, I guess, more technical and on the SBA side. And whenever I get those in, all those denials, there's an email address. I have my certain contacts at the SBA because I've just done this for so long. I can email them and then get it cleared up pretty quickly. But I've seen things from not being incorporated, not having a certain board resolution that they need.
Oh, wow.
Those things are really easy to clear up as long as you know what you need to provide to them.
Now, what about, a lot of businesses have, unfortunately closed during this COVID time. What happens to a business that closes, that is sold off, or simply can't remake these payments if and when they start? I mean, what's the guidance for that?
Yeah, so let's take one step back because the payments don't start until 24 months from when the loan was dispersed.
Okay, great.
So you get a 2-year grace period?
2-year grace period.
Wow,
that's really good. Interest-free during that period?
Interest is accruing.
Okay. But
you got to think about it. It's only accruing, it's 3.75%.
It's simple interest.
Well, yeah, I mean.
Is it simple interest or do we know if it's compound interest?
It is. Actually, I don't know the answer to that question.
Well, neither do I. I guess we'll have to figure that out.
Yeah, we'll figure that out.
We have to figure that out. Well, that might affect some businesses. I mean, you never know, in terms of their expenses, you don't know what they want to incur. But, that's an interesting question. I never knew the answer to that.
Right. I mean, it's meant to give these businesses somewhat of a reprieve.
Sure.
And then when they get back on their feet, then they can start, paying this low interest long term, which is 30-year term.
Okay. But if they decide to close or sell their business, what advice are you giving to them?
Right. So if you have an EIDL, if you have a loan through the SBA and you're going to sell your business, you have to get approval from the SBA.
To sell. Okay.
Yeah.
Interesting. So what about this? Let me ask you this question. So what happens, say you're a business and you're looking for $1 million, right? That's what you're looking for. That's the number in your head. That's the loss. That'll help make me whole. You get the return back from SBA. They give you $500,000. Do you have is there an appeal process? Is there a way that you can say, nope, guys, I really need another $500,000? Is there some sort of process you can go back to the SBA to appeal for a higher number?
There's absolutely a process. And if you're not okay with the amount that they originally are willing to give you, there is an email that it's a reconsideration email that you send to the SBA, and then that starts the reconsideration process. You'll likely be assigned to SBA loan officer, and then we can talk it out with that loan officer to get you where you need to be.
Sure. And as far as just generically businesses that are companies that you own that are eligible for this, it's pretty broad. Like you said, as long as you're a business that was in existence, less than 500 employees, you're not a foreign entity. It seems like it's a very broad bucket of potential business owners that are available to get this program.
Absolutely. Yeah. I mean, I have not run across a business that has not met the eligibility requirements.
Okay.
That we've helped.
Sure.
So the bucket is very big, located in the United States, under 500 employees, in business before January. In business before the pandemic.
Let me ask you this. I mean, you mentioned that a lot of businesses qualify based on the eligibility requirements. Let me ask you this. How many businesses do you think actually know this program even exists?
Not many, because here's what happened. PPP comes out, EIDL comes out, the restaurant advisor. All these programs are just being flooded out by Congress, and they kind of got a little bit confused, and the PPP was so popular in the beginning. Mm-hmm. EIDL was kind of like, oh, that's a loan that you have to pay back. The PPP, you don't. So it's kind of just it's really becoming popular now.
Okay. But it's closing soon.
Gotcha. Exactly. So, December 31st.
So we have a short fuse, and so basically we need to get the word out there.
Yeah.
Absolutely. I mean, this is a great program, especially since they've increased the uses of these monies, because there's banks really aren't lending all that much. The SBA is kind of like going to be the leading lender for businesses after this, for sure. And they may have been before, but they're going to way outpace the banks after this.
Now, are there any clients or businesses that you would say shouldn't apply for this, or you would advise them against getting this program, as far as, if they're really debt ridden and you have concerns that they might not be able to pay this back, or anything like that?
Yeah, I mean, if you are a business and you're like, look, we're going out of business anyway,
right?
Then probably not a good idea to incur more debt.
Sure.
Yeah, right before you sell.
Yeah, so out. I mean, we have to have a plan for this money on the business side of things. But, in generally speaking, this is a good loan if you need funds and you plan on paying it back and being in business in the next 2 years.
And I assume long term, once after 2 years, when you actually have to start remaking payments, you're going to have to continually give the SBA updates or statuses, or they're going to be checking your returns to make sure that you're good to pay it back.
Yeah, I would anticipate that.
Okay.
There is the ability for the SBA to audit businesses as well. They really have not come out with who's going to be audited, who's not going to be audited. Like other programs, they tell you if you get X amount of dollars, you will be audited, maybe not. So anticipate. I would, as a small business, function as if I'm going to be audited.
Sure.
Keep records.
Right.
This isn't the time, because if you do get the letter from the SBA, we don't want to have to go back and try to recreate everything. We want to be able to be kind of on our P's and Q's in the beginning.
So really document how you spend this money, where it goes, that kind of thing.
I mean, our original advices were keep these funds in a separate account.
Okay.
Don't commingle it.
Actually, that's a great idea.
Yeah, I mean,
then you could track everything.
Yeah, don't commingle it with another account. Now, like you said, Conrad, you can go to this one bank account statement, and you'll be able to every check, everything is coming out of there, and you know what it's for.
Sure.
Working capital, or if you want to use it for business debt.
Okay.
That's interesting.
That's really informative, and I think that's great information.
Yeah, I think so. So basically, I think this is a good, timely podcast to get out. I mean, it's very, very sensitive information. I mean, Adam, I know you've been doing this a long time. I would hope that businesses get this advice.
Yes.
And especially, seek the advice of learned counsel.
Yes.
Because, I mean, having someone on your side that knows it, especially, I mean, you got some inside, contacts. I mean, I think that's, I would want that if I was a client,
And what are some things, if a client's interested in this, you recommend them go to the SBA website and start, but then if they have more detailed questions, they could obviously reach out to you or someone here?
Yeah, absolutely. Like Conrad said, I was in this, when the pandemic hit, I was making my way into the office when it was just me here, reading through Congress's bills. I was there from the beginning, so I know how it started, which makes it easier to realize how it changed.
Yeah, absolutely.
Keeping up with it, and through that time, our clients had some struggles in the sense that it's difficult dealing with a large governmental body, and now I've had to deal with them for a while now.
Right.
So I know the kind of shortcuts. I know the email addresses, the phone numbers to actually get something done for these clients.
Especially with such a short timeline left.
Agreed.
Right. December 31st, you need to, that's when the program closes. So we need to get our applications in soon.
Sure.
Well, great.
Thank you so much for joining us.
Adam, thank you very much for coming on the show. And this wraps up another edition of Health Law Talk with Shahardi Sherman-Williams. We will have more learned guests on in the future episodes. Please make sure you subscribe to our podcast, whether it's Apple, Spotify, Google. And we look forward to hearing from you. Everybody have a great day.
Thank you for listening to Health Law Talk presented by Shahardi Sherman-Williams. For more information or to contact us, please visit our website linked in the description below. Also, please be sure to subscribe to our podcast and follow us on Facebook, Twitter, LinkedIn, and YouTube linked in the description below. Thank you for listening.